It's no secret that the sim-to-funded trading world is absolutely exploding right now, and honestly, it makes sense. When there's a product that allows you to engage in the market while minimizing your risk, yet if you do well, there's a chance for a large financial reward, of course it's going to be popular. But whenever there's an explosion in popularity and thus the overall user base, there's bound to be a lot of questions. And that's exactly what I'm here for, to answer the most popular questions. And in this video, we're going to be answering what account size is the best account size. Now, as a very quick side note, if you stumbled across this video and you're a little bit confused about what sim-to-funded trading is in a general sense, I answered that in a previous video, and I'll make sure it's linked in the description below. Anyway, back to the question at hand. What account size is the best account size when using sim-to-funded trading? In all reality, is a really fair question, because as soon as you learn what sim-to-funded trading is, you go to one of these websites and you start to scroll and you realize that there's seemingly endless amounts of accounts, account sizes, and various other options, so no duh, it can be really confusing. So what I'm going to do in this video is show you the most efficient and effective way to compare all of these accounts no matter what is going on. So if things change in the future, or if you're using a different firm, at least you know the overall process of how to properly compare them. I should note that for the purposes of this video, I'll be using Apex Trader Funding for the examples, because as I'm filming this, Apex is by far the most popular, and I should also let you know that I'm filming this in early 2025, just because in a couple months, a couple of years, obviously the numbers could change, but remember, the overall point of this is the comparison process, not the exact numbers. So now, with all that background out of the way, let's get rocking. The TLDR to this entire video is that there is no perfect answer. There's no one size fits all, as in there's no optimal account size that is perfect for everyone, because of course, all traders are different. We all engage in the market in a different manner. So what I'm trying to say is, when anyone argues that they know the perfect account size, it's not gospel, it's just an opinion, and what you really need to do is learn the comparison process that I'm about to show you, so you can find the perfect account size and the perfect account setup for obviously your own individual trading. As I mentioned before, using Apex as an example, before you select your account size, you first have to pick your account plan, and the three options are Trade-Evate, Rhythmic, and Wealth Charts. To be completely honest, at the point that I'm filming this, Wealth Charts is brand new. I haven't heard anything good, I haven't heard anything bad, I haven't heard anything at all, and because it is so brand new, it doesn't really feel appropriate for me to share an opinion. So for this video, let's just focus on the first two, Trade-Evate and Rhythmic. These two data providers are very similar, but obviously there's some differences that I feel you should all know about. You can use Rhythmic if you plan on exclusively trading on a PC. If you want to trade on a Mac, if you want to check it on your phone, well, that's when you should probably pick the Trade-Evate option. And now that you've selected your data plan, it's time to pick the best account size. This goes without saying, but to know if something is the best, we need two or more things to compare, which means that we need a starting point. So for this, we'll use a 50K account. So for a 50K account, you're allowed to trade up to 10 contracts, your profit target is $3,000, and your trailing threshold is $2,500, which means you have to hit a $3,000 profit without having a $2,500 drawdown to pass the test and go from eval to performance. Now, as for the question, are these numbers good or bad? Well, we don't know. Good or bad relative to what? For our first comparison, let's double up and use the 100K account. Obviously, it is a 100% increase to go from 50,000 to 100,000. As you can see, on the 100K account, you're only allowed to trade 14 contracts, which is a little bit of an issue because that's only a 40% increase to go from 10 to 14. But in all reality, I don't think that this one is that big of a deal. Most of the time, I'm only trading one contract, and if I go more than that, I'm just trading two anyway. So the fact that you can only trade 14, yes, it's not a perfect linear increase of 100%, but I don't find this one to be that problematic. Looking at the profit target, it's 6K coming from 3K, so that's a 100% increase, perfectly fine there. Remember, from 50,000 to 100,000, we doubled up. It was a 100% increase, and that was perfectly reflected in the profit target. This is the issue. The trailing threshold on the $50,000 account was 2.5K. To keep with this overall trend, the linear increase, you would naturally expect 5,000, but instead it's 3,000, which is only a 20% increase. You see the problem there? You have to get much more profit without that much of a drawdown relative to the 50K account. By definition, this $100,000 account is more difficult to be successful with because even though you need double the reward to pass the test, you're not offered double the risk. Let's do another comparison. Let's take a look at the $300,000 account. To go from 50K to 300K, that would be a 500% increase. So that's kind of our line in the sand. That's our measuring stick. On a 300K account, you could trade 35 contracts. On a 50K account, you could trade 10 contracts. That's a 250% increase, which isn't necessarily in line. It's not necessarily linear, but as I said before, I don't find that one to be that egregious. But if you take a look at the profit target, that's where we start to see a bit of the issue. On a 300K account, you need to get $20,000 in profit to pass the test, while once again on the 50K account, you only need $3,000. This is not a 500% increase. This is a 567% increase, which once again, the fact that you are given more capital, but you need even more profit, not so good. But even if you were able to stomach that fact, it's when you look at the trailing threshold that we see problems as we did before. On a 50K account, you're allowed a 2.5K drawdown. On a $300,000 account, you're allowed a 7.5K drawdown. That is a 200% increase on the trailing threshold, but your profit target is a 567% increase. The fact that you have to get so much more profit and you're really not afforded that much more wiggle room, that ratio in itself is growing, which yes, by definition, as we saw before, makes it more difficult for you to be successful. So looking at the 50K account, comparing it to the 100K account, and comparing it to the 300K account, you as a trader have the highest odds of success, obviously using the 50K because it has the most favorable ratios. But with all that being said, I know some of you watching this want extra capital, so let me show you a slightly different way to consider this problem. Let's use the 150K account as comparison. To go from 50 to 150, that is a 200% comparison. In terms of contracts you can trade, you could go from 10 to 17. That is a 70% increase, not necessarily in line with 200%, but as I said before, that one really doesn't bother me. Looking at the profit target, you have to go from 3K to 9K, which is 200%, and then looking at the trailing drawdown, you have to go from 2.5 to 5, which is only a 100% increase, so not necessarily in line. So at first glance, you might look at those ratios, specifically the trailing threshold and the fact that it's not increasing by 200%, and you might consider this to be a non-option. But there is another way to look at it. Imagine if the profit target were just 6K, as in doubling up. 3K on the 50K account, and then up to 6K. Same thing with the trailing threshold, keeping it the same. 2.5K up to 5K. Don't worry about the fact that the capital is 150K. I'm really looking at that ratio between the profit target and the trailing threshold, just doubling up. 3 to 6 and 2.5 to 5. I think we would all argue that's pretty much the same thing. We're just playing with a larger amount of capital. So if we're all on the same page, saying yes, it would be fair because you're simply doubling up both the profit target and the trailing threshold, effectively what the 100K account should be, well, the only real sticking point is the profit target that you're trying to hit to pass the test. But beyond that, it would be kind of perfect. As in when you go from the point of trading on an eval to a performance account, that's exactly what a 100K account should be. The only sticking point is that profit target when passing the eval on the 150K account. In all reality, I would argue that it's not that big of a sticking point because it's not that difficult to pass these evals. If you're wondering why I'm so confidently saying that it's not that hard to pass these tests, I made an entire video about it. It's right about here. Click somewhere on the screen. It's also in the description of the video. But beyond that test, you can basically treat these 150K accounts as 100K accounts, and you're just doubling up your amount of capital, and everything else is the same. Obviously, that 150K comparison is not as straightforward as the 100K or the 300K, but I just wanted to bring it up because sometimes when you approach these problems, you can find unique answers when you approach it in a slightly different manner. And in more of a general sense, whether these numbers do or don't change, whether you're looking at Apex or another sim-to-funded company, it's this comparison approach that will help you find the best account for you. Of course, if you have any questions or thoughts, let me know in a comment below. And also, if you have any other generic questions on the sim-to-funded industry, let me know, and who knows, I might make an entire video just for you. That's what I have for you now. I appreciate you making it to this point of the video. I appreciate you stopping by. I appreciate all the good vibes. I'll catch you in the next one.